Hello all, and welcome to the Fintech Finance Virtual Arena, where I am hosting you here today. In this special arena, we're going to be discussing the exciting developments in payments fraud, AI and data when it comes to private banking. And so joining me is none other than Coutts and Investec. So guys, Mark, could I actually get you to kick things off? Can you give me a bit of an introduction to yourself and your role, please?
Sure. So Mark Dabbs, I've been currently looking at fraud systems analytics. We've obviously, as you said, we've mentioned in the private banking sector, and our role basically is to prevent and detect fraud, protecting our clients and ultimately the bank.
Absolutely brilliant. Brilliant. And Stuart, could you please give me a bit of background to your role at Coutts, please?
Certainly, I'm a managing director at Coutts. I'm the overall head of client service and delivery. So within that, I have responsibility for the onboarding teams and also our fraud strategies and approach there to protecting our clients.
I was just going to say, I absolutely love the background. It's a brilliant sign that digital adoption has really segmented across numerous different verticals. So without further ado, let's kick off. And as I mentioned, we will be looking at fraud, but also in the scope of the pandemic. So across the industry, do you think there's been an increase, Stuart, in fraudulent attempts within private banking over the past couple of months?
So I'm not aware of attempts, but I think what is very obvious is that at this time, when there's any crisis, fraudsters will use that opportunity to harvest data, to impersonate people and to capture data. And I think what remains to be seen, and you've seen fraudulent adverts around coronavirus cures or the traditional HMRC, key in your details here. Those carry on. So I wouldn't say there's anything new per se. I think what will be interesting is over a longer term to see whether they've been successful in harvesting data more generally from the UK public.
Yeah, that will be very interesting. And Mark, how about from your perspective?
Yeah, definitely. I think across the industry, there's definitely been sort of a noted increase in attempts, not necessarily private banking per se, but across the industry. I think to sort of touch on what Stuart said around the pandemic, I think when, societies are sort of put in a crisis mode, they think about themselves really, and with all the changes going on, it's a sort of a paradise for fraudsters to take advantage of people and to try scam them, clicking on links, or when sort of Bank of England or any industry drops their rates and there's the pandemic going on, people are looking to put their money somewhere secure where they can get a return. So things like investment scams start increasing. We've all heard about the PPE, where people are trying to source PPE, so that already makes setting up fake sites, websites, scams, clicking on links to try get this information, and that ultimately results in a sort of impact to the individual and ultimately the financial service sector.
Very interesting. And so Mark, following on from that, do you think this is just a standard trend that you see whenever there is a global issue? People always try and make the best of it. Do you think criminals are getting more sophisticated? Are phishing attempts getting more creative now that they know people are working from home? What are you seeing in that regard?
Yeah, look, I think whenever there's a crisis or something that's going wrong, there's always opportunity, whether it's good or bad. The fraudsters just happen to be on sort of the bad side of the world and trying to take advantage of consumers. Whether it's getting more sophisticated, I think the answer to that is two parts, yes and no. I think the traditional fraudsters are still using the same fraud MOs. They're just rebranding it with COVID. So your traditional investment scams and romance scams, trying to use the COVID-19 sort of backdrop. I think the sophistication piece, yes, definitely. I think as technology grows for financial institutions, it's also available to fraudsters. I think fraud as a service is sort of coming up, allowing the sort of less sophisticated fraudsters to maybe improve the scams that they have, allowing the clients to fall victim a lot easier to these scams.
Yeah, I can imagine. And speaking of that rebranding just during the pandemic, Stuart, obviously a lot of people are now working from home. How can cloud-based technologies effectively maybe mitigate some of these risks when people are making transactions at home? And for instance, I heard from a retail bank earlier in the week how the CEO scam, where people are getting a email to send a payment on Friday at 5 p.m. and there's no real way to verify. Can you tell me a bit more from your background in cloud, how that could actually maybe mitigate some of those risks?
Yeah, I think if you step right back, and we were talking just a few minutes ago about the fraudsters having access to technology, they have. The reality, though, is that they've recognised that as the banks are investing, and not just the banks, telcos are doing their part as well, are investing in fraud prevention, the human remains the weakest link.
Yeah.
And that's where their focus is. And humans are, when we're talking about under COVID, you're under a stress scenario, people will either make mistakes or people in a rush, and it couldn't possibly happen to them, and they will do things which are ill-advised. And the CEO scam you're talking about plays exactly to that. It tries to take an entity that's under pressure and convince them to pay an invoice. Your CEO has told you this, so in a very hierarchical form, well, if the boss says I need to pay it, I need to go and pay it. So I'm not sure cloud per se is really helping in a solution in itself. This is about a general education and getting companies and individuals to be more skeptical and more cautious about what they're doing. Yes, banks and institutions are investing in increased and more profiling to not only look at payments as they're being put into the system, but also if you're receiving payments into bank accounts to say, do these look in line with the sort of clients that we've just onboarded? But as that technology develops, so the fraudster develops. And I think at the moment we have to concentrate on how do we protect the consumer from making those ill-advised choices to start with. And that does require banks and institutions to quite often challenge their clients. Are you sure you want to make this payment? And not necessarily taking, yes, I want to do it, as being the right answer. Because if they're a romance scam, as an example, they're absolutely convinced that what they're doing is the right thing. So if you're the person who appears to be telling them not to, that's going to be a real challenge. So you've got to break through that and build that trust. And that's where institutions that have got long-term trust and relationship with their clients are better placed to have those conversations. But there is a danger that everybody thinks it'll never happen to them.
That's very interesting, and it kind of plays into what makes this virtual arena today so interesting, is that you both come from this private banking background where that face-to-face or that personal value is highly sought after. But kind of taking that on and coming back from that face-to-face, the frame of the topic we're mainly talking about is AI. And Mark, how do you think artificial intelligence and machine learning can help banks like yourselves, which that rely on that face-to-face and that impersonal touch? How can you use AI technologies to really complement that to actually provide your customers the best service?
Look, I think firstly, I'm not an expert in AI and sort of machine learning, but I'll give my input there. I think these technologies, what they can do, or what they're good at, is spotting sort of patterns. And ultimately, what it can do from a private banking perspective is allow you to tailor the service, particularly to what the client needs at that particular point in time when they require it. So rather than reaching out to a client when they don't need it, if you can tailor that service from a private banking perspective, irrespective of whether it's face-to-face, I think you always need to have that high-touch element. So whether it's somebody reaching out on a phone call or a video call, in the current sort of climate we find ourselves in, but it's getting to that point exactly when the client needs a particular service, rather than trying to push them something that you've got in your sort of wheelhouse that you want to sell onto a client. Interesting.
So it's also helping the customer experience by providing a safer service, but also only interacting with them when they need to. You don't want to harangue them effectively. How about yourself, Stuart? Do you think AI technologies and machine learning have a place in private banking to help fraud and improve customer experience?
Well, absolutely. We already use much of that technology combined with biometrics to protect our clients, and that will evolve over time. I think the whole use of technology to turbocharge a client director or a relationship manager is really important, to make sure that they are aware and prompted about the things that might be relevant to raise with a client. Absolutely remains true. But remember, private banking is all about a personal relationship. It's not about the sort of solution you might get in a retail space, which is far more vanilla and technology led, with people being a very secondary or third level solution. So it definitely has a place. I think one of the challenges is that AI works best when there's quite a large data pool on which to do some analysis and identify what's required. And the more that you have a customer base that is quite spread in its characteristics, and they could be in many dimensions, the more it will struggle to support you on that. But it can definitely help you with outliers. You know, we've played with that in terms of onboarding as well, in terms of supporting the process. So it's definitely got a part to play, but I think it's being realistic about where it can really add some value for you.
This kind of brings me on to my next question. And in terms of private banking as a whole, do you think that we're seeing a time of digital adoption in private banking faster than any other time before because of the pandemic? Do you think that digital adoption rates that we've seen in retail space specifically have massively increased? Have you seen similar levels in private banking, Stuart?
So we've seen an increase in adoption. We actually already had a very high level of digital adoption amongst our client base, both on the internet and mobile based. And in the early days of COVID, yes, we saw a number of clients decide that actually maybe now's the time to embrace it and go for it.
Yeah.
And they have, which is great. It's not been massive in terms of total increase, but it has been a number of clients. I think what's interesting is COVID has dialed back down from their point of view. Many of them are saying, well, I'm happy for doing odd bits and pieces on it, but actually I'd rather go back to that human interaction. And of course they can.
I can imagine, yeah. Choice.
Yeah, client choice, but digital has a real part to play.
Definitely. And how about yourself, Mark? You know, have you seen similar trends?
Yeah, look, I think from our side, it's always high tech, high touch. So you provide the technology that's there, but always with that sort of human element. I think the sort of private client segment wants that's the premium that they're looking for, somebody to be able to guide them through a particular scenario that sort of a retail stream might not be able to. So you always need to have that touch element, making sure that you put the client at the center and deliver exactly what they require when they need it.
Kind of going back to that customer experience through digital adoptions, do you think that we're seeing now that payments are being specifically done through digital channels as well, that we're seeing a streamlining of KYC and AML checks, that admittedly, obviously there's an increased amount of checks because they are being done digitally. But do you think that there's also, at the same time, digital technologies are also complementing that increased checks with also a streamlined customer experience, Mark?
Yeah, 100%. I think the digitization of the onboarding journey for any client, whether it's yourself or clients that you're servicing, has sort of revolutionized the onboarding process. I think for the client, it's far more slick. I think for the financial institution in the background, there's far more automation that can be put in and sort of checks around AML, fraud, compliance, whatever checks you want to put in the journey. And there's far less fallouts that happen as a result of that. So the client journey end to end, 99% of the time is far more slick than sort of your traditional paper-based or in-branch journeys that you would traditionally have.
Excellent, brilliant. And Stuart, do you agree?
So I think it has definitely speeded it up for some customers. The reality is that digital onboarding is really only valid for what I've described as people who've got relative vanilla situations. So if your source of wealth and your background is not too complicated to work for you, but if you're trying to onboard international clients, you're going to find that a harder process that you will actually need to do still a little bit of manual work around. I think the other bit that the industry is also reflecting on is there is a tension here. We need to have a really slick onboarding process to get clients into any institution, but we have an obligation as bankers to make sure we really understand who it is and to keep fraudsters out of the banking system. So I think what you're also seeing, so the contingent reimbursement model is an example of this as an industry, is firms are going to need to make sure that for accounts they bring in with a very light KYC, they have an appropriate monitoring of the payment activity and transactions around those accounts to make sure, until they really get to know the client, to make sure that that's legitimate business.
Excellent. And Mark, would you say that cloud and AI, and specifically machine learning as well, can help automate that monitoring, specifically if there are numerous different firms that you're having to onboard, being able to provide an appropriate level of interference and security, do you think that's something that machine learning can really come into its own when it comes to private banking onboarding?
Yeah, look, I think as Stuart said, there are some limitations, but I think, these technologies do help get to sort of the edge cases. So rather than focusing on the bulk of onboarding processes or AML and fraud checks, you're focusing on sort of the edge cases, getting most of it through. The fallout where the people then get involved, they're focusing on those particular cases that are a bit more high risk or, outliers, and then the bulk of the clients that are traditionally vanilla can go through and have a sort of a streamlined process.
Yeah, moving away slightly from the fraud and risk aspect, Stuart, where do you think AI technology has a place going forward in private banking? What can AI technology, if you had a crystal ball, provide private banking?
So I think we touched on it earlier on. As a relationship manager, you'll get to know your clients. And yes, you'll monitor what's going on, but you probably can't monitor it in the depth to which you'd love to be able to do in an ideal world. As people, we're really hard to spot trends and correlations between what other people in a similar situation might be experiencing. So I think AI can be really powerful there in terms of helping the relationship manager understand for other clients just like that, what might be the right conversation to have, what they might be struggling with, and to be more proactive in terms of actually helping the client with whatever their objective is, be it investments or investing in property, whatever interests them. So it's that augmentation of the relationship manager.
Very exciting. And Mark, how about from your perspective?
Yeah, I completely agree with Stuart. I think, as I've mentioned earlier, it's about creating that more personalized service, getting to the client when they need it, not just pushing information onto them. And once you get to that more personalized service, I think you're just going to have a happier client. Organizations are going to perform better, and everyone's going to get to that sort of utopia experience.
Very exciting. And I've got to ask it because a lot of our viewers come from the reg tech world, and they might not be in the financial services industry, but they're certainly specifically looking at technology. For those people, what would you say to them that a private bank looks for when it comes to the next biggest technological help when it comes to helping out these risk mitigations?
There are many people who are wandering around with solutions that they think they can just push into a private bank. It is fundamentally different to a retail bank. Some things still apply, but it's about understanding. It is all about that customer intimacy and understanding the total relationship. So we don't just talk about the client, we'll talk about the client's family in its entirety and the client's network. So understanding where we're coming from is important. And also understanding the complexity that comes with there as well. So, mixing commercial business and UK business, mixing international business as well. It creates quite a complex picture. So if you've got solutions that work in a commercial space and a retail space and are very personalized in what they can do, and are built around a relationship manager, so say, okay, it might work. But the other key thing is to understand the investment and the IT infrastructure that people already got, because actually linking systems into that is often where the biggest cost is.
I can completely imagine. And what's the typical, I guess, time frame now that a private bank would look to effectively bring in outside services? Mark or Stuart, because for some, we always use the example of obviously the challenger banks trying that waterfall approach where they'll look to onboard something, a new service every 2 weeks. That surely can't apply to you guys, and it shouldn't. But I mean, what's the typical time frame that you would look to bringing in outside organizations to really complement your pre-existing solutions?
So we don't have a time frame. We have a very clear plan of what we want to achieve. And as we go through looking at each of those, we're really commercial about, is that something we can just add up? Have we already got half the solution and we just need to build that up internally? Is it about exploring more with what the existing supplier before we go out and say we need to add something extra that mix, which does have more complexity? And we operate in an agile way wherever we can. So it's not as though we set a particular target. It's all about the context in which we operate. But we'd rather have fewer than more.
Brilliant. And how about yourself, Mark? Looking to what the challenger banks have done in the retail space, what does that look like for Investec?
Yeah, look, I guess the challenge with, as Stuart said, there's multiple systems, people coming and sort of approaching. I think if I had to sort of put my fraud sort of hat on, I would say we also take a bit more of a slow approach rather than having to chop and change. Because I think the challenge, as Stuart mentioned earlier, is getting these systems to talk to each other. There's a lot of, from a fraud perspective, there's multiple systems that you can implement into a bank, but ultimately trying to sort of link them together to create a unified client experience is the challenge. So I think it's more around a strategic approach, putting the client at the center, what is required for us to deliver on our sort of strategic objectives and what the client wants, rather than, looking at the tool and how we can use the tool. So looking at from that angle in terms of the client, and then going and looking, I guess, what we have in our wheelhouse, and if there's anything else that can complement and anything that we can bring on that will complement our services to that particular client.
Incredible, yeah, I can imagine. And Mark, as Stuart mentioned, as a private bank, you look at the individual, but you look at the individual's family, and it's a very extensive kind of catalogue of service that you can provide. What does this mean when it comes to sorting out risk and fraud for a private bank, having all those additional tasks? Does it provide greater data insight, or is it just a massive headache effectively when you're having to look at infinitely more variables?
Yeah, definitely. I think you do get a bit more data on an individual and a family rather than a retail client that might have bank accounts all over the place, depending on how the relationship is set up. It does make it a bit more challenging to go through that data. I think also sort of the behavior of clients in a sort of private client versus a retail client is quite different. You can have big corporate transactions and large sort of wealth transactions that are playing out, and then you've also got the private banking sort of transactional side that the clients are using. So it does make it quite tricky in terms of trying to pick up the fraud. And then you've also got to sort of manage the client experience. I think it's very easy to have zero fraud, you just stop every payment, but you're going to have very few clients. So it's about managing that balance and making sure that at the end of the day, you've put the clients at the center. Whether you're making a risk call or a client experience call, you have to make sure that you're thinking about the client at all times.
Brilliant. And I've got to ask, will AI actually be able to tell them this is now the time for an in-person call or an email? Will the AI actually be able to differentiate what the best course of action is? Or do you think that's still something that's going to be very much a human element for the relationship manager?
I don't think that is where we will get to. All right. I think the value of the AI is that information collection I talked about. The AI may say, look, it's worth giving Sarah a call, but the value in a relationship manager is they'll understand all the soft factors, what's going on, other things that might have happened, maybe market movements that morning. They'll be able to put it into context, and therefore you're not going to get to that point. That's what you might do in a retail world and have an automatic system going out to somebody with an email or a power dial to say, look, here, operator, we've already called this person for you. But that really doesn't fit well in a private banking environment.
I can imagine.
I agree with Stuart. I think it's about giving the relationship manager all the information that they can have at a particular point in time, and then they need to make the decision. I think that is the sort of way to go. I think you can't be too intrusive on private clients. So the relationship manager, at the end of the day, you need to augment the two from a machine learning perspective or AI, and then the individual ultimately making the call at the end of the day.
Oh, that's really exciting to hear how AI is really going to be just a supplemental technology that's only going to enhance the human interaction in private, whereas a lot of retail banks have had to release press releases saying that their AI isn't going to be taking over jobs or anything like that. It's still very reaffirming to hear that AI is actually this technology that can be used to just help the customer experience and help the experience of the relationship manager themselves. But guys, I think that's all we have time for. Thank you very much for appearing today on our virtual arena, and it's been an absolute pleasure and very, very informative for me. So thank you very much. And to all our viewers, I hope you enjoyed it, and make sure to check the rest of our series out at www.fintechf.com and of course YouTube. Look forward to seeing you on the next one. See ya.